Good afternoon, everybody. Today is Wednesday, the 6th of July, 2011. Hope everyone enjoyed their long weekend, and I'm sure a lot of you are probably on vacation. If so, then I'm going to make this somewhat brief anyway. I've been getting good feedback about that lately. So let's take a look at this S&P 500. We obviously had this big rally last week, and we've continued to see that the market has held on to its strength. We did see a lower high in here, lower low in here today on a 10-minute time frame, and that might have sucked some short sellers in or just created a little bit of nervousness. But the uptrend really remains intact as long as we're still having such shallow pullbacks and we're above this rising 5-day moving average. So we've traded in a pretty tight range here this week so far. We've only had 2 days of trading, of course, because of the holiday on Monday. But I would think that this would be now an important level for the market to hold. Let's just call it 133. We'll probably see that this 5-day moving average rises up and meets the market in that area as well tomorrow. I don't know what the heck this animal's doing, but we'll. Anyways, like I said, I don't know if we'll see a pullback in there or we'll continue to consolidate through time. As we know, the markets can correct by either pulling back price-wise, which is what I think the majority of people were probably expecting to happen this week, would have been something more along the lines of something like this here, something like that, just some lower highs and lower lows. But instead, we're correcting more, again, through time, and that shows that there's still bidders in this market. Now, whether those bidders are people who are trying to gain exposure to the long side because they feel as though they've underperformed, or if they are people who have been short and are basically trapped. They don't want to pay the offer, but they're still putting bids in there. But the point is, there's still bidders around. The supply-demand equation still favors the upside here. How high it can go is anyone's guess. We have to look, of course, for clues as to potential levels where the market has assigned importance before, like this 135 area that we've seen hit twice back in May, and a couple of real hard sell-off, the hardest sell-off really on that second test of 135. So sellers could reside in that area. We will see. To try to predict it doesn't make any sense, but instead to look at it and say there's a potential level is instead the correct way. If we see a little bit further pullback below that 133 area, then I think the next bigger level would of course be 132, and not just to throw out round numbers, but we have this 132 area right in here, 131.80, basically where we have that 50-day moving average. And if we can continue to just maintain above the 50-day moving average, I think that this market, we're going to see it will continue to hold up obviously well, but we're going to see the 10 and 20-day moving average coming back up through that 50-day moving average. And we're just looking at a more range-bound market so far this year, is and that range has been really pretty big and tested. For the most part, it's been basically 135 down to 126. Of course, we have a little bit of time that we spent above that level, but if we continue to hold in here, then I think this market, just you have to view the action as constructive. We did have what was the closing number there? I guess we had about 1,655 advancing stocks and 1,320 decliners today, and that was basically positive throughout the session. The NASDAQ was up once again. The NASDAQ's really been outperforming here the last couple days, and really right up against what is I think a lot of people are viewing as what should be resistance. Now, so far there is no resistance in this area. This is the level where this year we've seen some pivotal movement beyond this 58.5 area. That is, once we've attained that 58.5 level, it's kind of similar to where we were the S&P 500 at 135. So let's just take a look at that real quick. Here's this 135 level on the SPY, and on the Qs, the NASDAQ that is, we've got this 58.5 level. So we've had a heck of a rally here. We know, of course, that 55.5 was the break breakout that occurred last week, and once we went beyond that, this thing just has not slowed down really. You look at that 10-minute time frame, just a real tight upslope in here. We can draw trend lines on it and that sort of thing. I think that 58 is a near-term important level. You've got to ask yourself, where has the market come from? Where does it have the potential to go? Well, we've just had a rally basically from 54 about 8 days ago up to 58 and a half. So the market's expended a bit of energy here. It doesn't mean it can't continue higher, but was that about an 8% rally or so in a short period of time? That's certainly not a normal type of market action. And where does it have the potential to go before it's likely to encounter that supply? Well, I think we're right. We have to consider that this is one of those important levels. Now, we also had a trend line back here last week. We also could have looked again at Fibonacci here. So technical analysis isn't perfect. We had we had people saying, well, the 61.8% retracement of the high for the year to those lows would have brought us in here, and people were looking to sell short. We only want to look at it and say, here's a potential level, and say, the market has expended energy getting up to this area. Now it's extended. Does it make sense to be a fresh purchaser of the majority of stocks or of the market in this area? Probably not, but it doesn't mean you can't make money. What it means is you're going to have much more realistic expectations as far as being stopped out. I think the probabilities are that we should pull back, maybe down towards that 50-day moving average in the next week or so. And if we were to do that, we can see that we've got the potential here of a right shoulder to be formed, with this 58.5 being the neckline. So we have to just look at it and say, we're not necessarily looking to be told exactly what to do by technical analysis. What we want to do is we want to look at it and say, here are the possible scenarios. Here's what the odds favor. The odds didn't favor a run from 55.5 to 58.5. The odds did favor above 55.5. We would get some strength. Anyone's guess would have been, is it going to find resistance at one of these previous levels? But what if we just know the key action areas, and then we can manage risk after that? If you're still holding long, you should be raising your stops up underneath these higher lows and letting the market work for you. The market, our job is to interpret what's most likely, where these events are going to occur, and then to adjust our exposure accordingly, and try to keep our opinions out of the way so much, because our opinions, your opinion back here, my opinion back here was, hey, we're going down, and now it's how high can it go? And you might be thinking, well, it's going up too much, whereas over here you might have been thinking, hey, it's time to buy, it's down too much. You might have thought it on any of those days, but until the trend changes, you have to give the benefit of the doubt to the buyers who have clearly taken control and held on to that control for more than a week now. The Russell 2000 is up at 84.5. This has been, in this area, we're coming into a level that's been trouble for it in the earlier part of I guess 2 months ago. We had this 85 to 85.5 level. We're still a point away, so maybe we're going to continue another point up. Anyone's guess. Again, you can't say that there's anything bearish developing here with these higher lows that we see. So it's up to you as the account holder, who's the risk manager, to manage that risk and say higher highs and higher lows, maybe peel some off, but then decide which one of these higher lows am I going to give it to? Do I put my stop underneath this level here at 83.30, or do I put my stop just under 84? Whatever the level is, you have to have your level that makes sense for you, and say, well, does it, should I give it a 3-point stop when it seems like it's maybe getting ready for a pullback. You want to tighten them up a little bit, and let the market work for you. The semiconductors, as we know, they were the kind of the last group to rally last week when they got above that 33.5 level we were watching. Thursday, it took it out. It ran straight up to the 50-day moving average. That 50-day moving average has been an important level as far as support earlier this 2 months ago, and now it's becoming resistance at that same key level. So you look at this and say, well, look at how the volume exploded on the upside there. Now, for the last couple days, what's the volume been? The volume has been the volume's pulling back. Now we look at these semiconductors, and they've underperformed the last 2 days relative to the S&P 500 or the Nasdaq. But you can look at this and say we've got this little trend line. We've got the 5-day moving average. So maybe as long as we hold above 34, we continue to give the benefit of the doubt to the buyers. If we go back to the 3-day volume weighted average price, or just even for this week, the 2-day volume weighted average price, it's been pretty neutral. You could even make a case here that we've got this inverted head and shoulders pattern on a 2-minute time frame. You don't want to get too deep into the patterns on really any time frame, but I think getting back above 34.60, I think that's where you'll see that the buyers do come back in and possibly push these semiconductors up through the 50-day moving average. And the next level you would look for, as far as being potentially important, is this prior support area, which had also been resistance near about $36 a share. So that's the way these markets are looking right now. The financials got up to their 50-day moving average as well. We know that we're also at this what's been a pretty important area at about 1580. Maybe we're reloading for a test of that. If you look, we still have the declining 50-day moving average in those financials. So maybe we're going to need more sideways accumulation before a real upside move could begin. But there's better action, and this is going to be the key support going forward. Is about 1510 to 1520. If we can hold above that, then this market is starting to undergo the process of that transition of the sellers had been in control. It's turning more neutral, and up through 16 it basically puts on a green light to go to the highs, I think, for the year. So the markets are dynamic. Our plan has to be dynamic. We have to adjust to new information, whether it's fundamental or technical. The technicals are obviously a little bit more sensitive but news. We have earnings coming up starting next week. I believe Alcoa reports on Monday. This week is, of course, typically a lighter volume week because of the 4th of July holiday, and so many people are away and that sort of thing. But for those that are here, it's kind of I don't know if I'm going to explain this right. If you think about a fireworks display and you feel the momentum building and building and building, and then you see this big run up and pullback, you think, hey, well, maybe that was the finale, and then then the real show goes, and everyone knows when it's the finale, and the big display ends. But what ends up happening, at least where I live, is everyone, all the neighbors, start lighting their fireworks off, and that goes till about midnight, and then there's a couple stragglers that go till 2 the next day. But the energy is still there, is the point, and there's still stocks that are shooting off, and a lot of stocks that have been the broken stocks are making these rallies now. Some of the Chinese names like Dang today had a decent day. This is one we've been watching, and it broke this inverted head and shoulders pattern. We've seen that the transition of power has come back with a rising 5-day moving average, and this one still could continue to move higher. It's still got a healthy look to it. Last week we were talking about before this market, or as this market was just starting to turn, I was talking about how it's still difficult to trust a stock that looks like a traditional short. And I was mentioning Urban Outfitters, because the weekly chart, it was clearly breaking down. It is a clear breakdown here. And we were looking at it initially as a short sale candidate below these lows. Well, what ended up happening was, instead, it briefly went to lows and popped back up. And I was telling people, here's a type of stock that this is likely to get squeezed now, that the shorts are people have been basically hammering on this stock, trying to break it down because it looks so vulnerable on the weekly chart. But they had their opportunity, it came back up, and from that failed move lower came this fast move up as the shorts got squeezed. So those have been occurring a lot. There's still, like I said, that dang. There's this PANL that kind of looks like it. The chart really looks like hell, but it's maybe due for a bounce in here. You look at that 30-minute time frame; it kind of looks similar to this dang, and here in the next day or two, I think that panel could, you break these little highs and this little range that it had today. You break it past 37.50, let's say 37.35, with a stop down near about 36.50. This could be another stock that's getting ready to go. We were looking at, and not everything's working, not every day. Netgear is one that we were looking at last week, and then it had this nice little breakout yesterday and run. Today, what happened to it? Well, this is what you use stops for. So we had, this stock was breaking 44 yesterday. It looked great on the daily chart, up at all-time highs, and then today it got weak right away. It tried to bounce from that 5-day moving average, but got hit hard through there. So you have to take your stops and move on. It's better than being down 2 points in the first 2 hours of the day, regardless of how strong the weekly, the monthly, the daily chart is. If you're making new positions up at these levels, which is perfectly fine, you have to move to the sidelines and protect your capital first and foremost. So those are a couple of the names that we've been looking at. We've been looking at Value Click, which looks like it could still do something. Red Hat is kind of approaching these, this 48 area and holding up well. It seems as though maybe something's brewing in there. Gilead had a good day today. It broke some resistance. So there's still good setups, and rather than trying to pick the tops in any of these names that seem like they're up too much or they're extended or whatever, the better way to approach this market is to say, where can I find a low risk entry into a stock that seems as though it still has enough to potential to justify me taking the risk at this, what might be late part of this trend. Maybe this is just refreshing and we're going to go out to new highs. Don't think it's not possible. Prepare yourself to be wrong if you're thinking extra bearish. Prepare yourself to be wrong if you're thinking that everything is bullish and should run. You have to have flexibility. You have to have an open mind and be able to identify what's happening there in front of you, instead of forcing your opinion on the market and being angry that why is the market doing this? Why is the market not doing that? The market is just going to do what it does, and it's our job to find that medium somewhere in there to make sure that we're in tune with it. But anyways, I think you know what I'm trying to say there. Thanks for tuning in, everybody, and I will talk to you on Friday.